Welcome back to How to Trade. I'm Shane Vernier, head trading coach at howtotrade.com. Now, many of you loved our video, Learn the 9 EMA strategy in under 10 minutes. Now, if you missed it, check it out. Well, it's time to take the 9 EMA to the next level. This video will show you how to trade the conventional 920 EMA crossover strategy and the 920 EMA crossover with RSI confirmation. All right, let's get to it. Before you can trade the 920 EMA crossover strategy, you must set up your charts properly. Here's how to do so on TradingView and MT5. Let's start with TradingView. Okay, the first thing we want to do is add our moving averages. So let's go up to indicators and cursor down to moving average. And you'll notice that you have an exponential prompt. Go ahead and click that twice. That's going to give us the 2 moving averages we need. We're going to go right over here. We've got our 9 already set up. Let's go to the second one, and that's going to be our 20. So we go ahead and enter 20 there. We go to style. You need to make these different colors so you can easily discern them visually. And right there's your 920 EMA. You see the crossovers right there. Now, we're also going to use confirmation in this video. So we're going to need to add the relative strength index. You go right back up to indicators on TradingView. It's very simple to do. Go down to relative strength index, give it a click, and we're going to stay with the default settings, which is a periodicity of 14 on the bar close. And you'll see right there's our RSI, above 70s overbought, beneath 30s oversold. So there it is. You're ready to roll. Okay, now for MT5. Go up to the top of the screen, click Insert, go to Indicators, and come right down to Trend. We're going to add our moving averages first. Click on Moving Average. You'll notice that we have to adjust the periodicity. Let's go ahead and adjust that to 9, and also our method that needs to be adjusted to Exponential. Let's go ahead and go. Okay, that's our 9 EMA. Let's go back up to Insert, Indicators, Trend, Moving Average. All right, now we adjust the periodicity to 20. You're on Exponential, and also you're going to need to change those colors. I always like blue and red, but feel free to use whatever colors you'd like. So there's your 920. Now, we got to add RSI, and MT5 does support RSI. So let's go to Insert, Indicators. You're going to want to go to Oscillators here. Then we go right down to the Relative Strength Index. Give it a click. We're going to keep those default settings of 14 and on the close. And there's your RSI. So you're ready to roll with MT5 and TradingView. There are many ways to trade the 920 EMA crossover. We'll focus on 2 of the most popular, conventional and with RSI confirmation. The conventional 920 strategy is simple. Buy when the 9 crosses over the 20 and sell when the 9 crosses under the 20. When we trade the 920 with RSI confirmation, we sell crossovers when the market is overbought, which occurs when the RSI rises above 70. On the other hand, we buy when the market is oversold, as indicated by an RSI under 30. Okay, let's trade. Okay, we're going to trade the 920 EMA crossover in a conventional fashion. And if you remember from just a minute ago, what does that mean? It means that when the 9 crosses under the 20, we sell the market. When the 9 crosses over the 20, we buy the market. There's 3 keys to success that you need to remember, and it will lead you either into money or out of the money. You know when to trade, what to trade, and what duration to use on your charts. All right. For me, I want to do this when the markets are at their most active. I'm going to trade my Forex majors during that London-New York overlap. Now, that's important because that's maximum liquidity, and that's typically where we see a lot of the volatility and a lot of the movement. Now, you can trade them 24 hours a day. Feel free to do that. Just sort of dial back your time frame. Maybe look at a 4-hour chart for Forex pairs, and daily charts are fantastic too. The stop loss is going to be a little bigger, but they could actually get you into some real good trades and some big-time trends. So right now, we're going to start our trading day at about 9 a.m. Eastern, right during sort of the heart of that London-New York overlap. And right there, we've sort of got a little bit of a sell-off, so we're waiting just for a trade setup. So let's go ahead and roll forward in time. I'm on our market replay functionality, and we're coming off. Bang, wow, something big happened right there. Must have been a news event. There is your big move and your pullback. That's going to force our 9 over our 20. That means to buy the market. We have a couple options on our buy. I can buy right there on my candle close, or I can wait for a pullback in price to the moving average area. For me, I'm going to go ahead and send them long. I'm going to go ahead and buy. Now remember, every trade has 3 parts. You've got a stop loss, you've got a profit target, and an entry. We've got our entry. That's part 1. Part 2 is going to be our stop loss. I always think in terms of stops. If everything else goes wrong, do I know where to get out? The previous swing low on a buy or the swing high on a sell is a pretty darn good stop loss. In my view, that uses market structure and really a lot of the basic foundational tenets of price action. So I'm going to put it beneath that previous swing low. Not a bad out at all. So I've got my entry, I've got my exit. Now what am I looking for? You're looking to catch moves when you're trading something like a 920 crossover. We want to get in on a good move. If we're going to do that, I recommend probably a 1-to-2, a minimum 1-to-2. Although you could use a 1-to-1 risk versus reward ratio, or you could just wait until the market crosses back over and just let your positions run as far as you want. A lot of traders do that to catch big moves. So if in fact, let's just go ahead and say we're going to do a 1-to-2, your profit target's going to be somewhere up here, right around 106. It's going to be up in the 106s somewhere. Let's just throw it up there at 41 and see what happens. So let's roll forward in time, and you'll see right here, what do we have immediately? We get a pullback off of our entry, not surprising, off of that big bullish candle. And so right there, you could have got a secondary entry, really a beautiful secondary entry to the long if you wanted it. Or in fact, you could actually exit the trade right here on when our 9 crosses under our 20 right there. You could actually exit this trade and take a small loss. For me, I like being consistent with everything that I do. And so if I'm locked in with market structure and that swing low, I want to go ahead and give this thing a shot to work. Let's go ahead and just go fast and see what exactly happens to price action. You'll see we trade sideways for a long time, and then finally, you get a bit of a bullish break here and then a pullback. So that's a conventional strategy. Remember, the 9 crosses over the 20, you buy it. Okay, you've got options on your market entry. Your stop loss can be beneath the swing low, or it can be the next crossover. It can get you out of the market, whatever you want to do. You want to use a fixed risk versus reward, feel free. Or if you want to just base your decisions on crossovers, there's nothing wrong with that. Very simple way to trade. All right, let's try to do it with the RSI confirmation. All right, we're going to go ahead and trade the 920 EMA with RSI confirmation. Now, the rules are the same as the conventional approach to the 920, except our filter is going to be the RSI. The RSI is going to tell us when we should look to sell and when we should look to buy. The relative strength index, 70. Above 70 is overbought. We're looking to sell the market. When we're below 30, it's oversold. We're looking to buy the market. Simple, right? Our entry points are going to be on our crossovers. Right now, we're in overbought territory. 4-hour Great Britain pound USD chart. You'll see that we were in overbought territory. It looks like a few days ago. That doesn't necessarily mean that we aren't still in overbought territory. Very rarely will the overbought reading on the RSI line up perfectly with a crossover in the immediate future. So what I would like to do is understand that, hey, maybe our RSI is telling us we're not overbought anymore, but look at where we're at on the chart. I would say we're still in overbought territory. So that's the way that I see it. Bottom line is this: we got the makings for a pretty good trade here. So 9, when the 9 crosses under the 20, we're going to go ahead and sell this thing. So let's move forward in time, and you see right there's your bearish candle, a little bit of compression, but you do have those moving averages sort of becoming compressed. And right there, what do you have? You're pretty sure you're going to be getting your sell here relatively soon. There's your break. You still haven't crossed over, though. You've got to be very patient here, and just let's roll forward in time, and there's your crossover. So when your crossover does develop, we still have those options. We can sell the market on that bar close, or we can wait for a pullback and potentially sell either on a retracement level or maybe based right on those moving averages themselves. Let's go ahead and sell this thing at market. Now remember, every trade has 3 parts. Every trade has 3 parts. Where's our stop loss going to be? This one's easy. It really is. Top of market structure, no question about it. Shade it by a few pips. You sort of have a double top right there. We were in overbought territory, and now we're sort of creeping down. We got an opportunity to have a pretty good trade. So the second part of our trade. Now on a 4-hour chart, if we look at market structure, we could say, okay, we know there's an order block right here. Potentially some bidders right there. Is that enough money? No, we've got to get more out of this. At least, I would say at least a 1-to-1. More than likely you need a 1-to-2 or maybe a 1-to-3. But if you want to put this on and maybe look for a move, how about that spike low right down there at 132.47? That gives us an opportunity potentially to make it, and that's about a 1-to-1, not quite. It's still not enough. If you're going to trade this stuff, make sure that you get rewarded for it. And down there, that's probably the order block area, the demand zone that you should be targeting, maybe 130, 165. I like the crossover with the RSI and basing those decisions on market structure itself. So you can use a standard risk versus reward, but you don't have to. And let's go ahead and see how this trade pans out. We're coming off. Got a big move there. We're making money. Now we're crossing back over. Let's go ahead and see if we can get a resolution and just dial this speed up on this thing. And then right there's your big crash, and you would hit your profit target easily. Now here's the thing, and here's how a lot of traders do this. They're not really looking to buy down there. They're looking to stick with this. They're looking to stick with this trend until they get a crossover. So let's just roll forward in time and see exactly what happens. And if in fact you took that approach to the market,
you're in this for a major move. That's trend trading. The crossover with RSI, 920 with RSI can get you in on some big moves. So remember, demo dollars up here, but that's no joke. You get in on a big one of these sweeps, maybe you get right for a week, 2 weeks, 3 weeks. You can catch big moves doing this. So that's the 920 EMA crossover strategy with RSI confirmation. Simple. The key to your success is going to be your risk versus reward, where to put your stop loss, what to trade, when to trade, and what duration. The 4 hour on the Forex is a pretty good duration, so that may be a great place to start.
The best thing about the 920 EMA crossover strategy is versatility. It may be applied to any product on any time frame. Just remember this: short time frames and flat markets lead to frequent crossovers and chop. That's the weakness of any crossover strategy. Chop. Chop costs money. Avoid chop at all costs. Now, the conventional 920 and 920 with RSI are both solid ways to trade any market. However, your secret to success is to know what to trade, when to trade, and how to align risk versus reward. If you have these elements in alignment, then you can trade anything profitably using the crossover. All right, if you want to see it live, check out a live stream at howtotrade.com. Pop in, we do a bunch of them a week. We trade this live all the time. Now that's it for now. Like, subscribe, comment below, and we'll see you in the markets.